The RBA is preparing to raise interest rates tomorrow, and the consensus from economists is rates will increase by another 50 basis points. Joining me now is our business reporter, Edward Boyd. Ed, some economists, though, are now concerned that Australia could fall into recession.
Yeah, we already know the United States economy is in a technical recession. That's 2 quarters in a row of negative GDP growth. And the UK economy, the Bank of England's Governor Andrew Bailey last week said the United Kingdom, or Britain specifically, was in recession. Now the fear is Australia could be one of the next big economies on the list. We know the cash rate has been rising steadily this year. It started the year at 0.1%. It's already at 2.35. The expectation, about 80% of economists expect 50 basis points tomorrow. Just a small portion think it could be a 25 basis point increase. So the consensus is for another 50 basis points. And the fear is it could slowly tip Australia's economy into a recession next year, because we know it takes about 3 months for people with a mortgage to start feeling the impact of the interest rate increases. So that's all going to come to an head in the first quarter of next year, and that's when some economists think Australia's economy will be under a bit of pressure and potentially might register 1 quarter of negative GDP growth, Laura.
Yeah, Ed, we are starting to have that monthly read on inflation now, 6.8% the last month. The first time we've got that used to be, quarterly, every 3 months. So now that we have that information, I mean, is there any evidence that the RBA is going to use it? If all these interest rate rises are just to get inflation under control, aren't there already signs that that is happening and there's a lag?
Look, there are definitely signs that inflation is starting to come under control. And one of the easiest ones to look at is the price of oil. Oil prices were over $100 a barrel just a couple of months ago. They're now 85 a barrel. So the price of oil's come down. That's going to slowly filter through to the petrol pump. It does take a while before petrol retailers start charging us less money to buy fuel. That's a classic example of deflationary pressures on the economy. So we are starting to get these monthly inflation indicators. We got 2 last week. We got the months of July and August. And that's actually showed that inflation in July was 7%, and then it fell to 6.8% in the month of August. And we'll get the full quarterly inflation for the September quarter, the one we've just finished, not for another couple of weeks. We'll get that at the end of October, and the Reserve Bank will obviously watch that very closely. But pretty soon, we're going to be getting those monthly inflation figures just 1 month after the previous month. So the RBA is going to have a lot more data to sift through from the end of this month and from going into next year. They'll get a much better sense of where inflation is in the economy and be able to make cash rate decisions a lot quicker.
OK, let's talk about the stock market. It's been under pressure for weeks. Some of that Liz Truss induced, perhaps. It's expected to open higher, the local market that is this morning, but it could turn negative pretty quickly. Why?
It could turn negatively because there is a lot of global uncertainty out there, and we get a lot of our readings from our markets off what's happened in the States. And on Friday, US time, Saturday, Australia, the US markets plunged again, down by another 1.5% to 2%. So our market is expected to lift very slightly this morning, up about 0.1%, but there isn't a lot of good signs out there. Look, we're talking about recession. A lot of economists in Australia are now starting to consider whether Australia will fall into recession or other big economies. So that's never good for markets. So it could actually be a negative day again for ASX 200.
OK, we'll check in just after 10. Ed, thanks so much.